Hi everybody, a really quick lesson on the rules for recording revenue, expense, and drawings in the T accounts, but we're not going to do T accounts. All I want you to know is how to record the transactions. Are they debits or are they credits? Here's what we're going to do. Here's the simple rule. When you decide whether revenue, expense, or drawings should be debited or credited, the clue is to think about how it affects equity. So if it increases equity, it's going to be a credit because equity is increased with a credit. If it decreases equity, then you're going to debit it, because debits are decreases to equity. And that's the simple rule. So revenue, when you provide the good or service, it increases your equity. But the expenses, on the other hand, decrease equity. So revenues are credits when they go up. Expenses are debits when they go up. So expenses are always debits. Revenues are always credits. And then this last one we talked about briefly before, but I don't know if you remember. When the owner withdraws or takes out any asset from the business, cash or any other asset, please always use the drawings account now. It is also a part of equity, and it's going to track or show us every time the owner took something out of the business. And since the owner is taking something out of the business, that means equity is decreased. And equity decreases with a debit. So that's why drawings is always a debit. And a little tip, drawing starts with D, and so does debit. So drawings is always a debit. Just to rehash, revenue, record as a credit because revenues increase equity. Expenses decrease equity, record as a debit. Drawings, always a debit. I'm cutting it off. That's 2 minutes and 10 seconds. Thanks, everybody.